Hi guys, quick update here for Bitcoin. It's 18th of April 2025. Hope everyone's doing great. If you want to join the group, everything's here. It's 3 months free access to the group if you buy the full version of the masterclass. If you want to pay via crypto, just message me through the Facebook page. There's an email attached to the YouTube description, and then you can just message me through here if you're on Facebook. Now, Bitcoin, we are still bearish here. We've been bearish from the top. I don't see this as a bull market correction. If I get it up for you here on the log chart, which makes it slightly easier. If you're looking at this as a bull market correction, then fine. These are just normal, healthy corrections within an overall bull market. I'm not of that opinion. I think we have formed a cyclical top here and we still have lower to go. I'm not convinced by the recent bottom here that we formed. Fairly poor low, similar to the ES. I mean, we've not even ran the low from the election. So as an absolute minimum expectation for any of this, of course, we are going to go much, much lower than 69,285. As an absolute minimum, you would expect or anticipate weak hands who bought on the election November the 6th. Where are they going to keep their stop? Here or here, right? Below the last swing low. Why did we not take them out? If this is really the big moonshot to 1 million, I've had 500,000, 10 million. We have the full accurate long-term wave count for this particular market as well as every other market discussed on the Facebook group twice a week, Mondays and Thursdays. That is the minimum expectation, 69,000. Now, recently this a global M2 money supply has been making the rounds here, so we can just pull this up on a sorry, that's not it. This is a global M2. So we're here on the global M2. As you can see, there is a lag now. Supposedly, let's just add every single bank on and let's just make it blue rather than yellow to make it easier. So as you can see, there is a lag. How do we offset this to the right hand side? Right click here, left click, add indicator. So you can add an indicator to another indicator. And we want to find simple moving average, and we want to take the 1 day rolling moving average. So in effect, it's like the exact price. Okay, no good taking a 100-day moving average. It's the 1 day rolling moving average, and effectively that's just going to mirror the exact price pretty much to the tick of the global liquidity index. And then here is the offset. So apparently it's anywhere between 12 to 14 days. I've heard as high as 10 weeks, that would make 70 days. 14 weeks would make 108 days. So let's just go with that 108 days, and then you're effectively going to offset this to the right hand side. So this is the original global liquidity index. Let's just put that in red now. And this is, let's put that in orange. And this is the 1 day moving average off this. So it's a derivative indicator from the indicator, right? So that's how you do it. You right click, and you can do that with anything. I think you could probably put an indicator onto this. So I wonder how many levels you can go to. But anyway, let's get rid of the original indicator then. So 1 day moving average, and we've offset this. So is it as simple as that, right? So apparently we've bottomed according to some technicians, if you want to call them that, and apparently by August 25 we're going to be at least 107,000. And can we extrapolate this? The 10-week lag, let's just extrapolate that. That's not really working for us, so we can extrapolate that. Let's just extrapolate that even more. So let's just say we go on in this direction, this descent 47 degrees into the end of 2026. So I really have to we'd have to zoom and compress this chart down. So let's just say hypothetically line of best fit September 26. I can't really go much more than that. Apparently that that gets you apparently 369,000 by September the 26th. Obviously, we don't think that's going to happen. But that's the global M2 liquidity supply. That's how you offset it. This is what everyone's talking about. There's always a buzzword here and there. Obviously, we've been around for quite a number of cycles there. So we don't really believe in this now. I don't understand what's happened here. Okay, there you go. Right, so we're on the daily chart then. So let me just... perhaps we did not do that accurately the last time. So let's just do that again. So might not work this time. Line of best fit. Yeah, forget it. That's just a waste of everyone's time. So anyway, that's how you do the global M2 money supply. I don't think extrapolating it is going to get you anywhere, but apparently by August, so just before Labor Day, we're going to be at all-time new highs. Well, there you go then, right? And I would just point to the fact, whilst and it has been correlated to the price, and it is no doubt loosely correlated, I'm just going to highlight this moment in time here, whereby Bitcoin actually took quite a large decline. So this is the global liquidity index. So basically Bitcoin pretty much topped out when this was at 134-ish, and this continued to rally to around 139, and Bitcoin during that time basically went from 61,000 all the way down to 17,000. In fact, you could make the argument it's the opposite, right? When this peaked, Bitcoin actually bottomed. It was pretty much near its bottom. So that is the global liquidity index. You guys can make of that what you will. Like I said, if you want to learn how to read a chart, very, very useful. We caught a 500-point move in the ES. Probably only 3 times in human history has that occurred since 2008. It's to $50 per contract. So if you want to know what you're doing, just come and join the group. So anyway, that's the global liquidity index. Yeah, we'll just take that nonsense off there. The less said about that, the better. So yeah, this is a fairly poor low. We're not really convinced of this move up here. The only other thing I would point to, I always think as a market goes higher in a bear market rally kind of form, how high does it need to go to trap everyone? We look at the same moving averages that other retail traders kind of look at, these obvious indicators here. The 200-day moving average, that pretty much is there. So we've broken through the 50, we've had the death cross, everyone's gone bearish, double bottom poor low, boom, and now we're here. So breaking, let's say, over the bank holiday weekend, which is usually a time of low volume and, well, low liquidity, so it's easier to move the market. I wouldn't be surprised if another fake pump, break the 288, break 90, that then creates a higher high. And then people will be like, right, okay, any dip is viable. Then we get an S curve. Next thing you know, we get the next move down. So, and also on the stock market side of things, we're not really convinced that pattern is complete on the Qs. On the NASDAQ, obviously, we've been bearish from the top, and it was a huge move on SPXL. I'm convinced there are still individuals holding SPXL all the way down. Let's not even look at that right now. So that gets you to 88, 89, and then we continue the move down. So that's another thing just to point out there. And then in terms of Elliott wave, how would you count this? Well, you could read one complete 3-wave correction into here. 1, 2, 3, 4, 5. And then this is now part of a B. A, B, C. So once again, you can take the 1-to-1 logarithmic distance between this here and this here, and there's your algo target. So it actually makes perfect sense, given that the futures are closed today. We're going into a long weekend of low volume. We've seen that before when it was here. There was a long weekend, I believe, somewhere around here. It's a lot easier to move the market. One more fake bullish headline. That's your algo target. That's the higher high. That's the 200-day moving average. There are 3 types of buyers who would be buying up there. Run everyone stop. Get everyone nice and bullish. Next thing you know, that's the B wave in. Right? And then for those who have done Elliott wave, well, then the count would then be, if all of that is the A, that is then the B. You can see how we're nowhere near done. So we're still bearish in this market. Obviously, in a falling market, there is opportunity to buy the dip. We've been more associated with dip buying on the ES and on the SPX because there's more money to be made there. We've got this kind of ES basically struggling here. I mean, we're still looking at it to go back down to 5,000. Can get a bit annoying with all of this extended market sessions here. Let me just, for the sake of YouTube audience, just to make it easier on the viewing public here. Scales and lines, where do we go here? I forget where to go. Canvas, crosshair, trading, alerts, session breaks. Yeah, there's a way to just get some of that extended hour session out of there. Can be very frustrating. It just kind of gets in your way. Hidden indicators, symbol, electronic trading. Yeah, let's just reduce the opacity. Just get it to 0, just to make it easier. So basically, we were saying, look, the ES is going to struggle to get above this resistance. I mean, we are still long from here. We're holding SPY. We still think the S&P makes a new high. However, I'm not fully convinced that this correction as such is over, and I wouldn't be surprised. What we're saying in the group is another fake news headline next week before the end of Q2, maybe even before the end of May. I'm not really convinced on a Bitcoin bottom, and we know these two markets are at least loosely correlated. So another visit of 5 grand, so 5k on the S&P makes a lot of sense. Okay. Could it get worse than that? Yes, it could get a lot worse on the SPX. And the reason is the FANG stocks, many of them have topped for the rest of humanity. So that's the only concern there. So there's a lot of retail traders who are dip buying on the FANG stocks. So if you're one of those retail traders looking at Meta, looking at the metaverse over here, that has superseded my expectations. The upper limit was 666 and it's gone to 700. So that is an incredibly euphoric high. Not every dip is viable. That's like the first rule of the educational masterclass. Not every dip is viable, and never short a parabolic move. I've got the same moving average here from the other chart, the 200 week. There's nothing to say that it can't get there. That is a long-term institutional, in effect, moving average there. Especially for a stock that's been around since pretty much 2010, since the invention of the iPhone there. So, to me, that's not viable. That is undergoing a super cycle, a grand super cycle correction there. So once again, knowledge of Elliot wave can really make you a lot of money, but more important, save you a lot of money. I don't see Meta making a new high in the next couple of thousand years there. Now, this would be the worst case scenario, is that all of that is basically forming a larger B wave, right? So if it doesn't just visit 4,000 or 5,000 double bottom, giving away too much here, but there you go. We're happy to do that occasionally on YouTube. Give away some free knowledge. You see that it's hit the 50, so that's the algo target. And there's also a target at 4,700 on the SPY. So, a 1-to-1 would be here. So I'm more of the opinion that's the A, this is the B, and we're not quite ready for a verticality move. Although if we get it, we don't care. We're long leaps from here, and we're long SPY ETF. But if it visits 5,000, it's basically repaired the market, right? The market needs to undergo repair just underneath 5,000. We can't tell you why. Trust me, it does. So I'm of the opinion this move down here, this choppy move, is going to get people more and more short, get short in the hole, and that then creates the pattern that we look at in the group, and then we get the verticality move. And I think it's worse than that. Just like the C19 correction, the 2009 correction, obviously we can then go to the algo target, somewhere between 47 and 45. I personally don't see it going that low, because if it continues to trend down, then we have a lot of issues. This could get a lot worse. So I don't think institutions are ever going to let it get down that low. So I'm more of the opinion it double bottoms here. It's just underneath 5k, 48, 48.50, somewhere around that kind of region. Now, the one thing I want just to have a look at here is done what it had to do, which was to cross over into this high. And that then basically sets up the move, right? So right now, we're in a bit of a confusive, in a state of confusion, if you will. And also the highs down here, they're not really excessive highs. Those who have taken the masterclass, regardless of whether it is actually a poor high or not, it probably isn't, and it's probably formed in the RTH and in the New York session. But regardless, just eyeballing that, they're fairly poorish highs, right? It may not strictly be a high as per what we define as a poor high. It's fairly poorish, right? There are too many longs in the market, and we got a long liquidation. That's it, done. Simple as that. So you would think eventually those poorish highs need to get cleared. You would think the S&P would end, the move would end in a FOMO euphoric type of move, right? So it's completely reasonable to assume, you would also assume Trump wouldn't want a catastrophic stock market collapse within his first year of term. He's barely been in the position, 4 months for the second time that is. So eventually I see the S&P making a new high. But what Bitcoin is doing is somewhat confusing, although still within the parameters of what I regard as a normality there. It's still within the parameters that we're defining. Now, if Bitcoin does something miraculous and breaks 95,000, clearly everything changes, and even the S&P will then just make a long move from here, which is fine. Like I said, we are long from here, but to me, that is visiting 5,000 because it has to. So that's the thing. It kind of has to visit down there. Now, interestingly, on the SPY, it's never made a new high, but we know these are derived from the SPX. They're not necessarily one-to-one. So I just want to highlight that there, right? It's not quite touched it. Whereas on the SPX, on the cash market, it has. It's clearly gone through it, which is there. It's clearly gone through it, right? So slight divergences there, right? So that's all I'm saying, okay? Because if all of that is just a 1 and is part of a 2, and something like this happens, let's just say worst case scenario, it takes out $4,000, we have a huge problem here on the stock market, a huge problem. I'm not convinced that huge problem is here just yet. So that's the stock market, giving away $1 million gems as usual, right? So we'll bring it back to Coinbase then. We'll bring it back to Bitcoin. So I'm not looking at this as a bull market correction. We're in a bear market. We're bearish from the top. We still have lower targets, very precise targets, time-wise and price-wise. It all looks like a bit of a bull trap, looks like a correction. We've seen this kind of move before. We've had various bull market corrections that look very nice, they look very tasty. They're just there designed to get people trapped. 30-40% move down, 30-40% move down, 40% move down, multiple 30% moves, and then we had the big move down. So it's not like we've not seen this one before. So to me, it still goes lower. And if you're interested in any altcoins, you want to know what we're doing with the Bitcoin dominance, US dollar tether, we don't want to really give away any of that here. Just come and join the group. There's not really much else to say really. If I can break it down in a shorter term time frame, looks like a bit like a wedge as well. I mean, when it's the actual move that people believe, the real move, and it starts to go back up again, I don't think that's going to happen anytime soon. You're really blagging that 1, 2, 3, 4, 5. It's basically, you're really struggling at a leading diagonal 1. Now we're going into a 2, but just in chart pattern analysis, all of that just looks like a large wedge. And when has a wedge ever been bullish? They can be bullish, of course they can, but they're usually bearish. So I think you're really struggling to call that a leading diagonal 1. There's a time to be long, there's a time to be short, and there's a time to be fishing. And right now, everyone's fishing over Easter at Glacier Bay. They're ice fishing at Glacier Bay. No one really wants anything to do with this market right now. It's very boring, very frustrating, but you have to pick your battles. The best battle would have been on the SPXL. We caught this low. That's a top 10 move in the history of mankind. And the other reason we would want to visit 5K on the SPX is that I am convinced there's a lot of investors, retail investors, who don't really understand how these products work. I mean, look at that. Talk about the overlap from the 22 high, because it's not daily compounded. The leverage is reset at the end of each day. There's definitely investors who have held this all the way down. And they've held it all the way down because they were not anticipating such a big move. That's a 497-day low. It's gone back to the November 23 low. Whereas if you were 2x leveraged or 1x leveraged or just SPY without any leverage, you've not gone far that down. You've not gone down that far, have you? That's crossed well into the 2022 high. So that is a huge drawdown, and that's the danger of these leveraged ETFs. They're great vehicles short term to catch a dip and then roll it back up again. 52%, whereas you've only crashed 15% because it's not daily compounded. The leverage is reset. It was designed initially to for hedge funds, institutions, to hedge their futures positioning, for which is a very good vehicle. That's what it's supposed to be used for. Or short-term trading, absolutely. Just like what we did twice last week. So I'm convinced there are people still holding this. I'm not convinced that they've been shaken out. Fairly poorish highs up there. I do feel the SPX, if the market does recover here, makes a new high on the SPX, we can still go to 4.6 7,000. I don't think Meta's going to go, going to be following you up there though. I think Apple might have topped for the rest of time as well, so you're going to be careful what you're buying up there. Obviously we've been out of these stocks for over 6 months. We bought Nvidia at 40, sold it at 120. Stanley Druckenmiller then got out of there after watching my YouTube video. So we just get out of there first, right? You got to be smart or cheat. So because I'm convinced there's individuals holding this from the top. The pattern that I'm talking about, where the S&P short-term visits 5 grand, 49, 4,800, chills there for a few days, you can see they're going to get shaken out on the second test. And the second test is a bit more of a fear test, isn't it? In terms of Wyckoff, you could read that as a selling climax, automatic rally. Now we're going to go for the spring. So it makes perfect sense for this to visit here and get everyone shaken out. And you can see the volume on that decline, right? It's not as heavy as the volume on the way down, is it? Right? So you can see that, and that's how you know. Once again, we discuss volume analysis on the masterclass. I don't think I've had one student right now who hasn't been in massive profit since he's purchased this masterclass. So far, I've not had one. The ones who actually take the time to understand it, but you got to spend some time on it. And within a few weeks, within a few months, the concepts will slowly grasp together, because you have to know what strategy to use and when. If you're using moving averages and secondary indicators and global M2 supply, this, that, and the other, focusing too much on the fundamentals are lagging. Fundamentals would have told you the SPX is going to go 7,000. Great. We're still in a macro bullish climate in terms of the flows and everything else. But technically, you've just wrecked your entire portfolio in the space of a week. Anyway, do you see that decline there? So it makes perfect sense for us a visit of 7,000, and this is more forced selling. Forced selling, beach ball, push it underneath the water, lower and lower and lower, till it gets to a point where there's too much pressure the opposite way, then you get the huge squeeze. Anyway, those are all the nuggets for today. So if you want to join the group, if you want to know what we're doing, we share the accurate charts. Take the masterclass while you can. Obviously, as the Bitcoin market starts to repair itself, prices are going to be going up massively on all of the products that we share. So get in now while you can, while it's cheap. So everything's there. That is the ultimate situation with Bitcoin. I don't see it as bullish. I see it as bearish, and just a matter of time. But a lot can happen in one day, especially over the long weekends where there's low liquidity, and that means volatility. So be prepared for it. I think Bitcoin still goes lower. Bullish scenario, just before I leave here. Yeah, the key resistance zone that we broke down from was around about here, and that is the key, right? So it's not this zone here, it's really there. That is the zone. So something absolutely, humongous has to happen, miraculous. 94, 95, and then we've got something, right? Then I will completely change the count, right? Suddenly something's changed, then that's fine. As of the global M2 supply, well, I've given you my thoughts.